Welcome to another episode of Millennial Investing Explained. Here's today's question. Where should a millennial investor start their learning process? And then once they've started that learning process, when will they know that they've studied enough and they're actually ready to get started?
One thing that I'm always saying that is you never stop learning in this modern world. It doesn't matter if it's a trading or investing or financial market or if you're in engineering. I mean, the world has changed. The whole market has shifted. That there's no way that's not like 50 years ago that you get a job and then you're set for your life with your family and with that job. You never stop learning. When you learn how to trade, you will start trading, you always continuously follow new resources, you go to the conferences, you read more, you watch more, you listen more, and you start learning. So to answer to the second part of your question, you are never enough because the market is always changing and you're competing with other traders and other traders are getting better and the new tools are coming. It's just that notion that, I learned enough for life is just gone. And I think it's in any career, not only the trading. But there's a lot of information on YouTube. There's a lot of information on Google. There are a lot of highly reviewed books on Amazon and other publishers that people can start. If you're, for example, interested in day trading stock market, I myself have a couple of books on Amazon that you can go just search my name and you can see the books and read the reviews and see if this is something that you want to pursue or not. But, I found YouTube is a really good source that there's a lot of information in there and the people can start. And obviously Google, and there's a lot of financial websites that you can start, your career. And it really depends on what kind of trading you want to do. For example, I personally don't trade cryptocurrency. So if you want to invest or trade cryptocurrency, I probably won't be a right person to go to.
So is there a point where an investor will know that they're ready to start?
So what we recommend is after initial, when you read about it, you get some fundamental knowledge about the investing or trading that you want to do. We always recommend to do a simulation trading. And this is very, very important. And I want to emphasize that to everyone. Never, ever start with your real money. Even if it's a small $5,000, $10,000, never start trading with your real money. There's a lot of platforms that offer you simulated or paper trading with fake money trading. And we always recommend do at least a couple of months of that. Don't get the fear of missing out. The market is out there for you. So don't jump. A lot of people hear, Bitcoin, I just got jump in, open an account, deposit $20,000. No, don't get the fear of missing out. The market, the financial market is there forever. So you go and practice on some simulated account. So for our traders, we have a 3-month simulation program and we're not allowing anyone to go live trading with their, live money before a proper simulation. When they go through the simulation process, they have to learn the system. They have to learn the platform and technology that they have to work with. Then we tell them that you have to get a consistency of, for example, 1% a day in a simulation account. And when they get to that consistency in the simulation mode, they are allowed to go open an account, but they're forced to trade a very small size because it's very easy to trade the money on paper. It's like a video game. If you lost, you can just do it again. But when you go into the real account, you have to be very careful, especially at the beginning, because there's a lot of emotional and psychology also jumps into the game, which people really underestimate. And then slowly you grow your trading size so you can slowly grow account. So a lot of people think, education, simulation, and $10,000 a month or $2,000 a day. No, it's not like that. So education, simulation, and then you make $10 a day, you make $20 a day, and then you grow it to $50 a day, and then $100 a day, and you slowly increase it. Because something that always people underestimate is the emotional aspect of trading. When the trade goes against you, when you are in a paper money or fake money, you don't care. Or when it's real money, then you start acting completely against your plan, or sometimes you don't get out on time and you have to take a bigger loss or something like that. So people need to make sure they're ready for trading on a psychological side as well. So to answer your question again, as a summary, the moment that you have certain level of consistency and confidence in your simulation mode, you can go and start trading live, but on a smaller size.
I think that psychological standpoint or that psychological aspect is so important. And it's something that, like you said, should not be underestimated. When you're trading a paper account, it really doesn't feel like anything. It feels like you're playing with fake money because you are. But when you're using your real account, you can have the best plan set out in front of you and you can decide that you're going to follow that exactly. But when you actually start losing real money or psychological factors start to play in with your actual hard-earned money, that plan completely goes out the window and it becomes a lot more difficult to trade. So I definitely would not underestimate the psychological aspect of trading. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.